Good morning and welcome. It is Wednesday. It's time for Wednesday's morning market tour. Sorry, kind of hidden back here. We've got we don't have any high-profile economic reports. This is not something the market's used to yesterday and now today. Some input, but nothing that is reliably influential to price action. Quiet period for Fed speakers ahead of the FOMC meeting next week. And we're just kind of ranging around here still. So Monday afternoon had dropped. It looks pretty steep. It was pretty steep. This is just the afternoon. It was after taking care of 4301's objective that was outstanding from Friday above. Neutralized it. Retested it in the afternoon. Reversed down from it hard, at least steeply. Really, in the scheme of things, not very deeply. And then gapped down yesterday. Those are the two features that could have been bearish, or that could still be bearish. Yeah, we can get rid of these. That even though they didn't develop on the same day, they developed within 24 hours of each other and consecutively with nothing else in between to have changed the pattern in the interim. But the rest of yesterday didn't exploit that combination, didn't extend down any deeper, and overnight hasn't either. So if we're not gapping down under a relevant low today, then sellers aren't gaining any traction for the morning. There was this overnight dip. Yesterday's cash session close equated to 89. The overnight or the intraday highs basically 94.95, 89.95. That defines the overnight range until coming into Europe's opens, which suddenly saw some need to collapse right to the bias down signal. Of course, these are labeled after yesterday's close, before the Globex Open. And interestingly, there's 3-minute RSI diverging positively at the test. Here's 1-minute RSI also diverging positively. RSI goes from oversold, leaves oversold, while price bounces. Price dips to a fresh low, but RSI doesn't return to oversold. So not just a higher oversold, not returning to oversold. That's a positive divergence. That's 1-minute and 3-minute RSIs diverging positively simultaneously at a relevant level, at support. Whether it's a prior low structurally or calculably, something I've identified, that's almost an automatic buy for some kind of reaction. If you're monitoring and watching this, even if it's overnight, something typically is going to happen. It could be managed. The risk that it doesn't happen is going to be manageable with a stop, something lower. But once that crosses back above the prior low, something is going to develop, however temporary or durable it might be. And we still don't know whether this is durable or temporary, just because it's bounced back up into the earlier range. Here's the earlier range. Here's its 61.8 retracement. Let me come out a little bit more. Taking the internal highs and lows, not the highest high or the highest low. So that's resistance. This 42.92.25 represents the internal retracement, the proxy for the high, the upper end of that range. Natural resistance until we cross through there, and then a little room for noise, 1.5 points room for noise in this case. So until we're actually printing 94, we don't know that we've done anything more here than just bounce into the earlier overnight range as resistance. And if we start coming out of the bounce under the earlier overnight range's support, 42.88, 88.50, back under 88 starts signaling that this bounce was just a correction. Come on. Here we go. Okay, so back under 88, I'm going to start giving a benefit of the doubt to sellers having reinstated without buyers gaining traction for absorbing this dip or for the bounce back into the range. It's not an arbitrary spot, as I just demonstrated. It's a 61.8 retracement back into that range. So under 88 would start rejecting that bounce. By proxy, we'd look for the reward, the minimum reward being to test or retrace the bounce, the origin of the bounce. Maybe even return or break it, extend it, resume it, and then gap down. A lot of stuff yet to happen here. Nothing has really happened yet except form the basis for what could be a trending morning. Could be a trending morning in the opposite direction as well. Again, this overnight range, just fine enough, left to its own devices, but couldn't leave well enough alone. Had to stretch the rubber band. Snapping back up. If, having done so, the open is greeted back above or trending back up above the overnight highs, then we can look for returning in the opposite direction. We can look for a reward for buyers. What's the reward? Extending to the last relative high. In other words, to Monday's 43.06 high. And by the way, that would, by domino effect principles, that would start to trigger the bias up signal. You can't see it on here. Go to the blog, you can see the levels in the blog. I'll pull that up in a moment. You can see, here's the bias up parameters. Bias up signal, bias up target. Bias down signal, bias down target. If either one of these signals were to break through 1015, then we would extend to its target. So, bias up will trigger above 42.98. That's right here. At 1015, if we're above 42.98, targeting 43.11. Not just returning to 43.06, 43.11. And if the bias down signal that's already been engaged but maybe re-engaged and broken by 1015, if it's broken by 1015, we put into play the 42.66 bias down target. And probably, by the way, something more substantial. I would expect that to set the tone into the weekend, targeting 42.38. And if either bias signal, if this is what it looks like, if either bias signal were touched, post-open. See, this is not really a qualifying touch. It's overnight. It's pre-open. But starting at 9:30, between 9:30 and 10:15, touching either bias signal between 9:30 and 10:15 and holding its test, if it looks like this at 10:15, or inversely, holding a test to the bias up signal, then that would be a reverse bias. And a reverse bias, having held a test of one signal, would then target the other signal. That's just in the morning, not with the afternoon bias signals. And that can be just as productive. In fact, if 42.84 were to hold a test, that's a 14-point target. That's actually a little wider of a target or objective than to trigger the bias and put into play one of its targets. So that's the bias. But I'll, of course, identify bounces, etc., any setups as they develop with the annotation of an arrow. I don't really have a buy signal above at the moment. I would suggest, though, as I just described on the 61.8 retracement, And it's room for noise up to 94. That's just the spread between the 38.2% retracement and the 61.8% retracement. Just counterparts to each other. That above 42.94 would start to suggest that the open could gap up above yesterday's highs. So some degree of confidence in being long above 42.94. All right, but we really don't have anything else underway at the moment. Meet back here at 9:15, and we'll see if anything by then is indicating a gap open above or below relevant levels and some commensurate trending. All right, as far as looking at other markets, the euro struggling to hold. It had a nice recovery Monday from gapping down. Never turned positive or never closed positive. Went out testing Friday's close. Certainly didn't close above its buy signal. Even yesterday, testing it overnight, reacted back down and has reacted back down again to test these prior lows. Two of those tests, this is the euro, two of those tests have been absorbed, overnight tests, and or at least an overnight test and a close. Just adding more power to being able to break above 107.40, but we've got to actually break, or 30 that is, got to actually break above 107.30, and then we could look for, at that point, and no sooner can we look for a substantial rally in the euro. Silver, flat, nothing really to report until its buy signal is triggered. Gold, flat, nothing to report until its buy signal is triggered. It can pierce it, overlap it, has to close above it to trigger it. Long bond is still fluctuating in this range. It had closed under, or at the very best, went out testing, but closed under its 128.02 sell signal immediately on Friday, immediately gapping down on Monday, and then pretty immediately retracing, but never converting that retracement into a reversal. So despite having been higher at times overnight, despite overnight being higher highs, we still don't have a break higher. And until there's a break higher, let me get the bigger picture here. We're really just sitting on pins and needles, waiting to return down to prior lows, March's low, which I think we can still see June. A little more volume there. That's what we were trading at the time that it developed. The island back at the beginning of March. The gap under all prior lows, that alone at 123.12 requires being retested intraday. Still hasn't been, but that's what is prevented this rally from extending, and what is suggesting that its reversal isn't finished. That happened to develop into an island. It was rejected by an island by gapping back up. Islands are made to be retested. Probably because of the open under all prior lows, that's likely to be revisited. So whether that island's going to be retested by a new down leg underway, or just to tag up to neutralize it, form a double bottom, that requires being retested eventually. And a pretty elaborate head and shoulders developed in the interim. Its minimum target has been met. So we are looking at downtrending resistance. Let's go back to June. And a break lower as likely having reinstated the decline, or confirmed that the decline back to the low is underway. And crude oil, which had maxed out its bounce, it had already held resistance into the weekend, pretty critical resistance, gapping up, threatened to break the pattern, break the bounce from being just a bounce. when we have downside objectives outstanding. But that was rejected at resistance, at the open, never extended beyond the open. Here's that range whose failed breakout had put into play at a minimum move targeting the lower end of that range, which it fulfilled. Calculably, this was its fulfillment. It didn't have to, but it did then gap down. And what did it create? At 67.33, a gap under all prior lows. That itself requires being filled from above. It has yet to be retested. It requires being filled from above. Not a gap to a close. Gaps to closes aren't always filled. Their proxies are, at the least. It's gaps back to opens that are always filled, as a rule. We almost got back out above the upper end of that range, held its resistance, and presumably we've reinstated the return to 67.33, if not also to 62, which has been a long-standing target of mine. Not trying to get it done right now. And then Bitcoin. So 24 hours ago, I was describing when we were sitting right here, basically. That's what it looked like 24 hours ago. And I was describing, here's what a bottom would look like. A reliable bottom would retest the low, test at least 25,483, and then reject it abruptly, aggressively. That's what a bottom would look like in Bitcoin. And Bitcoin complied intraday with a blip down right to 25,483, actually probed it by about $15, and then reacted up sharply, but also went on to actually trigger the buy signal. So while that's what a bottom would look like, the inflection back up was triggered pretty quickly above 26.3 and extended higher. The only thing remaining now, it didn't have to extend to this degree. It's helpful. It creates extra room to absorb selling pressure without it damaging the chart. Here's selling pressure. It hasn't yet damaged the chart. What would damage the chart? Closing under 26.3. Or not closing, but within a 24-hour window of having broken back above 26.3. That's yesterday's noon hour. Reverse back under 26.3. That would damage that chart. So long as we can make it through the noon hour without reversing back under 26.3, this buy signal would be validated. It's really interesting that this weakness here, that came after all the news. I mean, certainly this was the Binance news, but Coinbase's news didn't do anything durably and has since gone on to retrace the Binance news, the origin of where price was when the Binance news was released. SEC suing Binance. SEC suing the Coinbase platform. That did not do anything detrimental. If anything, it revealed these sellers aren't strong-handed. So I would look for some positive developments, but at least look for the market to start realizing that if the noon hour can maintain above 26.3. And it's kind of ironic that I'm using the Binance. I think I need to get away from that, but I'm using Binance anyway. Ethereum, it's comparable. Ethereum is not the leadership. Between the two, it didn't require a fresh low. It had already met a relevant 61.8 extension closely enough, but its buy signal still needs to be maintained for at least a 24-hour window. All right. Any questions about any of that, please ask. Otherwise, let's end the recording here and meet back here at 9:15. All right, good luck today. When we were sitting right here, the return to 67.33, if not also to 62, which has been a long-standing target of mine. All right, I do see a question here. Give me a little bit to work my way through it. Unless you can summarize it real quickly, which would be preferable if you can. But I'll see if I can work through this question and be right back. So, what's different in last night's Globex versus other Globexes when other Globexes that you're assuming have, or you're concluding or assuming or labeling other Globexes, or the difference that is being that, or I'm sorry, your assumption is that this Globex last night is similar or identical to all the other Globexes, that I haven't looked for the opportunity to trend, I think. Where I am looking for the opportunity to trend out of this one. I tell you what, I'm going to get the, it's early. If you could edit that to 2 quick points. I think trying to be elaborate is, which I appreciate, is this is just losing the thread here. The previous two, especially Globex ranges. What is it that I was looking for in the previous two Globex ranges? I don't quite understand that point. What is it? What's the difference that you're wondering there seems to be? Does that make sense? Somehow last night's Globex is different from the prior two, and somehow there's a different projection I'm making from, or no, I'm sorry, somehow this is funny. Somehow last night's Globex is similar to the prior two, and yet I'm looking for a different outcome from this one. I think that's the question. That's it? Okay, well, it's different from the other two. It's not the same. You're saying it's the same, and I'm saying it's not. So why is it the same? let me actually get more on screen here. So I look at Globex Sunday night, and I see a narrow range throughout the night. I look at Globex Monday night, I see a narrow range throughout the night. This is post-open, this little blip. I look at Globex last night, I see a narrow range, but not throughout the night. There's actual trending attempted at a relevant window into Europe's opens. So there's actually trending going on. So it's not the same pattern. And then beyond that, there's a host of, that actually opens the door to being able to anticipate other behaviors as building blocks on top of that. Was that it? Let me know if that's not it. Okay. All right, welcome back. So we are greeting the open at the upper end of the range, back in the earlier range, not quite maintaining anything above the earlier range. So I did have a line in the sand here identified around 94. That was tested pre-open by a fresh high, so we can just suffice it to say that 97, above 97, through the first 15 minutes would get every benefit of the doubt for extending yesterday afternoon's rally. The minimum or even immediate objective. Let's go with minimum. Minimum objective, basically 43.01, a retest of 43.01. The likely objective to actually retest Monday's high, 43.06. And then potentially, assuming that all of this maintains above the bias up signal through 10:15, putting into play the bias up target at 43.11. So through overnight highs, through 9:45, creates position of strength, and we just anticipate whatever the path or duration or the time taken that we'll be back at prior highs. As far as the downside, if we're not actually making it out above earlier highs, that starts jeopardizing a return to the overnight lows. I mean, we could be testing 80, we could be dipping to 86 post open and still not yet indicate that the lows are going to be taken out, the bias down is going to be triggered. I just don't have enough going on here to the downside until we see the open to have anything different than 88. So I'll still look at 88 if 88 is being probed. We'll start looking for sell signals if the open, post-open action isn't really taking off to the upside within or after the first 3 or 5 minutes. We should start seeing upside relatively soon after the open if we're going to see it at all this morning. All right, now I'll have other levels on screen as necessary. Any questions, please ask. Be right back. right, so the first thing I want to do at the open is see if there's any proxy for the gap back to yesterday's close. Cash session close. The cash session close equated to, where are we? Should be 90, 89.75. And the cash, and today's open, opening print that is, 92.75. So not a really big spread here. In other words, the proxy for filling the gap back down to yesterday's cash session close is 91, basically. 91, 90.75. Anything lower than that, especially if RSIs are oversold at 91, 90.75, I would expect actually filling the gap. That's not a real big deal. On days with big opening gaps, that can be a big deal. Or if we get too far removed, in other words, remember what the bullish setup is? The bullish setup that I described at the 9:15 opening update is to exit the first 15 minutes above overnight highs. And it's not for lack of proximity and not for lack of trying. If we don't, because we're right here and blipping up, ticking up. So if the first 15 minutes at 9:45 aren't exited above overnight highs, that starts to be bearish. So knowing that and extending, I should say, the distance back down to this 61.8% retracement between yesterday's close and today's open, the proxy for the gap back to yesterday's close, if we know that's an attraction, from right here at, it's not that big a deal from right here at 95, 94, but if there's a probe above overnight highs and it at 9:45 isn't extending, let alone is retracing, that attraction at 91 gets to be pretty important. It also might help to accelerate price down to fill the actual gap or more. So information, it's just information at this point to know that 91, 90.75 is the proxy for the gap back to yesterday's close, which otherwise we're just giving the upside every benefit of the doubt for being able to extend. Here's the 3-minute without the overnight, already probing above yesterday's highs. Just another reason why it'll be that much more important to exit the first 15 minutes, the opening 15 minutes of volatility above overnight highs as well. Right at resistance, 97.50, 98, that was created from Friday afternoon's high, let alone Monday's range, a 61.8% retracement back to its highs. Can't really get up there here. But anything above 88, or as I described at 9:15, just as long as testing 88 isn't rejected. We didn't need to gap up. Yesterday's close didn't require gapping up to extend the afternoon's rally this morning. And not 88, sorry, 94 being the line in the sand. Likely attractions above are 43.01 and 43.06 just to retest those prior highs. But then notice the green line, the thick green line being the bias up signal. If that is exceeded through 10:15, if it looks like this at 10:15, which it won't, there's going to be a lot of price action between now and then, but if this is what it looks like at 10:15, to have exceeded the bias up signal, that would put into play the bias up target at 43.11. Exceeding 42.98 at 10:15 would target 43.11. Now 42.98, now that it's been tested post-open, 42.98, if at 10:15 we have not maintained this recovery above it, that's a reverse bias. That would put into play the offsetting test of the other bias signal. That's back down at 42.84. So pretty critical test ongoing right now. You can see the reaction down approaching 43.01. Let's go ahead and look at 96.50 as a pullback limit, just to start the countdown. So having been productive, the signal is so productive, it's so far removed from its original inflection at 94 that I can calculate how deep of a pullback would just be noise and how deep of a pullback we can attribute to weak-handed counter-trend sponsorship. What's their attention span? The usual attention span during the open is 3 or 4 minutes. Any other time of day, closer to 3 minutes. So if this is where the usual attention span of counter-trend sponsorship begins, we start a 4-minute countdown as soon as it qualifies. We don't want to just count down noise. But that's 96.50. Has it been probed by at least 4 ticks? It has, albeit some of those being errant ticks or sentiment extreme, more errant ticks than sentiment extreme, but not a whole lot of time or energy being expended here. The attention span of weak-handed counter-trend sponsorship not really being taxed. And by the way, if one side is doing something, the other side has to be letting them. So if this is weak-handed counter-trend sponsorship probing under 96.50's pullback limit, then that's also strong-handed buyers letting them, giving them some rope to hang themselves. However long it took, or however long was spent under the pullback limit, once it qualified, all 4 minutes don't have to be spent under it. Whatever did develop from there has resolved up to a fresh high. In other words, the origin of the pullback has been retraced. That is a productive pullback limit. There's no bullish reason to revisit the low of the productive pullback limits test. No bullish reason to print 96.50. And by the way, the bounce or rally, whatever this is, has extended far enough again that we can recalculate the pullback limit. To 99.50. So other than a test of this pullback limit that's allowed 4 minutes of the usual attention span of counter-trend sponsorship, other than that 4-minute window that would be disqualified from triggering a sell signal, can't be doing both. Can't be testing or can't be correcting a buy signal and triggering a sell signal with the same bars. So other than that, during that first 4 minutes of probing under the pullback limit, if it is probed at all, there's no bullish reason after that to revisit 96.50, let alone its 95.50 test. It was tested down to 95.50. But there's 43.01. That was going into the weekend. That was unfinished business above that kept alive the rally coming out of the weekend. And it was tested. It was satisfied. It held a retest. And has since corrected. Since corrected and now retraced. So 43.01 is Monday's high, Monday morning's high. Forget about or just ignore the sentiment extreme here. That's the knee-jerk reaction to 10 o'clock snooze. It's not qualified. It's just knee-jerk reaction. By definition, that's weak-handed. But 43.01 and then went on to 43.06 later. That's the high was 43.06. The pivotal high, the high prior to the actual high, is 43.01. Does everybody see that? 43.01, 43.06. Their interim low is probed under 42.86. Definitely probed under their interim low. As soon as their interim low is probed, there's no requirement to ever return to 43.01. But once 43.01, if it ever is returned or retraced, as it just was, that all but ensures that the actual high is going to be tested too. So once the interim low between pivotal high and actual high is probed, if ever returning to the pivotal high, it's a pretty good bet that we're going to eventually test the actual high too. Not necessarily on this leg, but that is now basically unfinished business above. If we were to immediately dip here without yet touching 43.06, then we would know that that was a temporary dip. Pullback limit is 4,300 half. And that's really, unless there's a huge margin or a wider margin between the pivotal high and the actual high, 43.01, 43.06, unless there's a wider margin, which there often is, that's not very useful to know about the higher attraction to the actual high. Or it's not very useful to know unless 43.01's test were to react down, because then we would know all the way down that's just temporary. That's useful information. Not to get too bogged down in the details or more details. But this is stopping, these little peaks here are just literally a tick or two short of their projections of the resistance. So it suggests that this is, it doesn't look like it, but that there's still pessimism in here. Straight up since the open, but the degrees to which the surge is finding interim resistance and hesitating at least suggests that there's still pessimism up here. From a contrarian perspective, that is potentially bullish. Steve, I'm just seeing your note. Are you able to hear? I think we weren't yet open when you posted earlier. But let me know if you hear this. Great. Thank you. So feel free to ask any questions. I mean, you're not really just stopping in today and tomorrow morning, going to know all the nuances. A lot of this, some of this at least, is referencing items, levels, calculations that are listed in the blog. That, of course, being on the simulcast and on the YouTube channel, you don't have access to. I also, I think there's a lag. Isn't there some sort of latency? The vidiROOM itself, there's no latency. This is the charts ticking live, but I think YouTube slows it down by about 25-30 seconds. I wish I could do something about that. You can do something about that, but I can't. So we're not really getting any great tests. Notice the difference here. I just want to point out the difference. This dip, pierce, whatever it is, this overlap of the pullback limit, 4,300 half by one tick, that may as well have just touched 4,300 half. It may as well have touched 4,300. There's no difference between those until that's pierced by at least 4 ticks. 4 ticks during the open, 3 ticks any other time of day. Until that's pierced by at least 3 ticks, it doesn't even qualify as testing support. Testing the pullback limit. This did test it by at least 4 ticks. Not all 4 minutes. The countdown starts when there's at least 4 ticks piercing it. By the time 4 minutes had elapsed, price had already recovered. There was nothing to take from that, nothing useful from that encounter. What we really want to see is a pullback limit probed for 3 or 4 minutes, aggressively, substantially. Obviously, any kind of a responsible stop if price dips all the way through the pullback limit by multiple points, 42.98, 97. That far removed from the high, most responsible stops, especially during the open, will have already triggered. And we can focus at that point on the 3 or 4 minutes being elapsed or being close to elapsing, and if price is close to the low, that being a really attractive long entry, just because it's so close to where we'd know it's long. I'm sorry, to where we'd know it's wrong to be long. The closer we can get in a position to the stop, to where we know it's wrong to anticipate that resolution and to limit the loss. That is the more attractive entry, the most attractive entry we can hope for. And sometimes we won't get it. So for instance, here's a pullback limit that's tested by at least 4 ticks to start the 4-minute countdown. By the time 4 minutes elapsed, we were already back at the origin pretty much of that pullback. That has nothing to do with that. Not attractive. We were just that much likelier, though, having held for 4 minutes, to be resuming the rally, to be returning at least to the origin of the pullback. But it's too far removed at that point to merit long entry, whether re-entering, adding. Too far removed from where we'd know what's wrong to put more money on the table. So nothing really to do with that. But we could have put in a limit order. Not that it would have been filled. It wouldn't have been filled, it turns out. Before extending higher, had there been some more delay in extending higher and another dip back down to or toward the 4-minute low, a limit at 96.50, if that had filled, would have been an attractive entry. Still no greater likelihood of recovering. I mean, no greater likelihood just because of our entry price. And there we go. So usually, more often than not, much more often than not, the origin of a pullback will be retraced. The trend is your friend until the end. Eventually it won't be. And maybe that one time it's not is then recovered to resume the prevailing trend. But if we know that if we just enter the marketplace with that assumption, that pullbacks are likely to recover, don't calculate anything, don't identify any patterns other than a pullback. And we can then arm ourselves with at least one assumption, the usual attention span of weak-handed sponsorship, or the attention span, the patience, I should say, of strong hands, letting weak hands seem to control price. We can combine those two and have a pretty decent strategy. That is, the closer we can get involved at a 3 or 4 minute extreme, and be prepared to take the stop, have a resting stop, not a mental stop. That risk versus the potential reward, if it's a 1 to 2 at least, preferably 1 to 3 risk to reward ratio, you can do those all day long and make money. We just enhance that a little bit by identifying exactly where to start that countdown. And also, what are the likelihoods of returning to the high or higher? How big of a higher target is outstanding? Because the risk to reward, just to get back to the origin of a dip, isn't always going to be that attractive. Like if our reward was 4,300 to buy even 96.50, that's a pretty tight stop that we'd have to work out to 1 to 3, 1 to 2 even, risk to reward. So notice something here about RSI. RSIs on this high, price just made a higher high. Look at 1 minute RSI is diverging negatively. 3 minute RSI didn't return to overbought. We were never able to adjust the pullback limit, but the pullback limit hasn't actually been tested until now. This was just piercing it by a tick, not even 3 ticks to qualify as testing it. This is the first literal minimum 4 tick probe under the pullback limit. So we start the countdown. This is minute 1, and when we have a degree of confidence where the 4th minute low, or the 4 minutes in its entirety where its low will be, this may be the low right here. Then we'll know how to calculate our risk under that 4 minute low. All 4 minutes don't have to be spent under the pullback limit. The more extensive the pullback the more aggressive the pullback, the likelier that it's going to be temporary. Now also, notice how this is coming into support. It's premature. We're just too early in the first 4 minutes, in the 4 minutes of usual attention span of weak-handed counter-trend sponsorship. If you want, I mean, there's certainly a strategy to buy support, sell resistance. Here's support, the bias up signal. I'd like the opportunity for the 4 minutes allowables to be spent under the pullback limit to be closer to or past those first 4 minutes, and then dip to 42.98 or nearby. With RSIs having leftover bought territory, that would be an attractive long entry. So close to where we'd know it's wrong to be long. Also with the improved potential to resume the rally. The 4th minute, the usual attention span of weak-handed counter-trend sponsorship. The 4th minute is being taken advantage of, and we may not be right at the low when the 4th minute ends. It's ending, and we're pretty close to it. I'm going to introduce a sell signal just in case the bias up signal doesn't intend to be recovered. It was recovered through 945, so I'm not going to be aggressive on a sell. I'm giving buyers the benefit of the doubt since the first 15 minutes did lapse above overnight highs. But I know now the 4th minute, or the 4 minutes in its entirety, happens to be the 4th minute that made the low, but the 4 minutes in their entirety tested the pullback limit down to 97. So anything lower violates the pullback limit. Until then, our premise is the trend remains up, that this is a temporary pullback. It doesn't mean as a trader that you sat on your position. You have to have a stop that reflects your own risk tolerance. But we're pretty close to where we'd know it's wrong to be long. What's the upside if this recovers? Actually, the upside if this recovers is to trigger bias up, putting into play the 43.11 bias up target. So say we were able to get long 4,300, 11 points upside, we'd know we're wrong, say under 96, 4 points risk to 11 points potential profit. That's almost a 1 to 3, at least a 1 to 2 plus. That's pretty attractive. I can also, nobody's forcing me to buy something at any specific price or time, so I can put a limit order in down here at 98 if I want to. Why not? Right back down to the bias up signal. Then I'd be really close to where I'd know it's wrong to be long. 2 points. Assuming 96 is my stop. If I got filled. May not. Gotta let some go. But a 98 entry with a, would have just been filled right here. The 98 entry with a 43.11 target, 13 points upside with a 2-point stop. Obviously 1 to 5 risk to reward. It doesn't mean it's going to play out. It doesn't make it any likelier to play out. It makes it likelier to lose less when it doesn't. So we know where the 4-minute low is. The premise is that that was counter-trend sponsorship and weak-handed, and so the rally is going to resume. We can even start to infer that the bias up signal is going to trigger and actually put into play 43.11. Anything lower, and that's not the case, especially as we get closer to 10:15. As we get closer to 10:15 and 42.98's bias up signal, which is recovered right now, but if we start coming into 10:15, probing back under 98, that would be suspicious. What happens if 42.98's bias up signal being probed right now isn't still being probed at 10:15? That becomes a reverse bias, and holding the test of the bias up signal would then target the bias down signal. 42.84. So, yeah, I want to be a seller under the pullback limits test, under a buffer, room for noise. So I'm going to come in here at 95.50. Nothing precludes being whipsawed around here. So other than a knee-jerk reaction to Bank of Canada raising rates, this looks like it's just a knee-jerk reaction to a headline. By definition, headline reactions are knee-jerk reactions. Being knee-jerk reactions are weak-handed. Weak-handed sponsorship. The inflection is clear. The inflection, right there, there's the 4-minute low, and no noise needed, no buffer needed. Under the 4-minute low, in fact, before even getting back down to the 4-minute low, a lot of momentum. But as far as these sellers Are they attracting strong-handed sellers, or are strong-handed buyers patiently waiting for the news to lapse, for the reaction? Until the 4-minute low is probed, there's no reinforcements, same as a pullback limit. Until the 4-minute low is probed, there's no violation. It's just temporary, weak-handed, counter-trend sponsorship. If these sellers can't attract buyers or can't attract reinforcements under the 4-minute low, whatever it turns out to be, it looks like this is going to be it. Until reinforcements arrive for sellers, that's just weak-handed sellers, weak-handed counter-trend sponsorship. That's the assumption, that's the premise. By the way, until the first 4 minutes tracks reinforcements any lower, there is 4 minutes allowed of counter-trend detouring back above the sell signal. All of this action is testing the sell signal, and it's testing it in the wake of a headline, so it is an artificial catalyst. It's not organic. So there's the 4-minute high at, call it 99, 1 or 2 points, 1 to 2 points higher, room for noise. Also, notice on the way down, a bounce formed before resolving down. That bounce's 61.8% retracement is natural resistance, and its recovery would be bullish. That comes out to 4,300.5. I'm actually going to do a different calculation than that. Instead of the absolute high to low, get rid of the errant ticks, the sentiment extreme, back off the high a tick, comes in closer to 4,301. This whipsaw may be just that, temporary itself. A deeper pullback, exacerbated by headlines. And by the way, if so, if it's not intending, if this doesn't maintain its reaction down back under 98, if the bias up signal actually does trigger, despite being probed right now, at 10:15, that's when it matters. Back above 98, 42.98 through 10:15 would put into play the 43.11 bias up target. So I'm not finished with this entire setup's potential to recover. And if it just took an extra leg, we'd already pulled back. We'd already expended a lot of selling pressure under the pullback limit. 4-minute attention span of counter-trend sponsorship, weak-handed counter-trend sponsorship. Got to be a little bit more productive than it would have been on its own because of the catalyst of the Bank of Canada's rate hike. That extra detour, if that is what it is the detour. If 42.98 is recovered through 10:15, then there would likely be compensation for the delay. In other words, normal single pullback contained to its 4 minutes, that's already built into the expectations of recovering and where we recover to, where buyers are rewarded for absorbing this dip. But if buyers are rewarded for absorbing this dip, or said another way, if this many more shorts get trapped, we would expect some compensation for that delay. In other words, maybe a more aggressive or substantial upside, maybe a steeper upside, maybe both. First things first, at 10:15, we need to trigger bias up. So right now we're overlapping a sell signal, actually hovering just above the sell signal, but we're still in the range that's testing the sell signal. There's nothing wrong with taking a short here based on the sell signal with a stop and reverse to long above the buy signal. I think a long here with a stop and reverse to short is a little more sensible, since the bigger picture still points up and the bias hasn't yet spoken to the downside, and the bias maybe won't speak to the downside. So we're back up to the 4-minute high, fluctuating around the sell signal. A couple things going on here. That's first. So we're still testing the sell signal. Also, we're within 3 minutes of 10:15. We're within 3 minutes of 10:15 and overlapping 98. You can see it more clearly on the 1-minute chart, but there's the 98 bias up signal, and within 3 minutes of 10:15, 120 is the afternoon buy signal. Still testing or overlapping the bias signal. That invokes a grace period. So 10:15 suddenly becomes irrelevant, because now if 98, the bias signal, isn't dispensed with already, which it can't be now that we're overlapping it within 3 minutes of 10:15, then a grace period is invoked, and same rules apply through 10:30, but they apply at 10:30 instead of at 10:15. Grace period is invoked. There's no reason why this should be expected to hold, why it can't be any more productive. RSIs continue to deteriorate. There's a greater likelihood that RSI, at least 1 minute RSI, if not 1 and 3 minute RSIs, get to oversold before sellers are done here. There's still plenty of time for this extra dip to recover 98 in time by 10:30 to trigger a late bias up. I'm not going to be able to get very aggressive on the buy signal until at least 1 minute RSI gets oversold. Not that a bounce, not that a recovery can't develop without ever returning to oversold. It's just that there's such a overwhelmingly greater likelihood that this ends at or after returning to oversold, that's where I've got to be focused, is on the likelihood. We can only trade likelihoods. But I'd still be entirely interested in getting long on the right price action back above this interim high, for instance. If we can get another dip, just attack 92. Just to attack 92 to within a few ticks. I'll come down pretty aggressively to 97.50 on the buy signal. Question: if at 10:30 we're under 42.98, then bias down. A test of the bias down signal would be in play. Correct. And that would have been the case at 10:15, by the way, except that the bias up signal wasn't clearly rejected, wasn't clearly holding as resistance at 10:15. So that invoked the grace period through 10:30. But that's absolutely correct. Also, you flip a coin, heads, tails. Sometimes it lands on its edge, right? Now, okay, sometimes it comes up double zeros. Let's go with that. So red, black, double zeros. Double zeros is if 42.98's bias up signal, which was being overlapped within 3 minutes of 10:15, if it's being overlapped again at 10:30, if the grace period that was invoked lapses at 10:30 and we find ourselves overlapping 42.98 again, that's not a signal. Nobody gets the benefit of the doubt. That's not a no bias or a reverse bias, that is, looking for the other bias. That's not a bias up. That would be a non-bias if at 10:30 the bias up signal is being overlapped again. As we get closer to 10:30 and further from 42.98, we get less likely to trigger bias up. Look at RSIs. 3-minute RSI continues to deteriorate, but not 1 minute. So it's delaying the inevitable. Not helpful to a recovery, but helpful to a short. Bounce limit is 92. So we're no longer testing the sell signal. We're actually probing deeper than its first 4 minutes. And we're probing deeply enough under the first 4 minutes that I can calculate a new bounce limit. Wash, rinse, repeat, it starts again. There's 88. If broken earlier, would have been a sell signal then. It is supportive now. So I've got a couple premises here. The first 15 minutes did develop exclusively, or at least exited above overnight highs. The next 15 minutes didn't counteract that. It looks like the second half hour is going to be exited or lapse under the entire first half hour. That would give some near-term downside direction unless we could bounce here pretty quickly. So I'm assuming this is a position of strength, that buyers are in a position of strength, that this is a temporary pullback. Just got the wind at its back, basically. Be that as it may, it's going to need to run its course. Unless something dramatic were to happen pretty quickly here. And to shoot back up to 98 by 10:30, even that would be suspicious. This far removed from 98, this close to 10:30. So as of 10:30, we're definitely under 98, having held a test, a probe above 98, through not 10:15, that invoked the grace period, but 10:30, puts into play an offsetting test of the bias down signal, 82. 4282 is in play. That's the objective, is to retest 4282. Could this be a detour? Could this be just a deeper detour? If it is, then stronger-handed buyers have to come in pretty quickly. They had an opportunity to come in by 10:15. They had an opportunity to come in by 10:30. Their next opportunity to come in is through 11:30, when the bias window starts lapsing. And here's the bias timelines. What did I say? 82? Yeah, sorry, 84. No, it is 82. I do see that. Let me correct that in the blog. Sorry for that confusion. It's lower. Let's go with that for a moment. All of that can be invalidated by recovering until there's a fresh low. There hasn't been a fresh low since 1030 triggered a late no bias. All of this downside attraction can be negated by exiting the bias window above the initial test. How high was 42.98 tested? To call it 43.05. Exiting the bias window at 11:30 to noon above 43.05 would invalidate the attraction to the bias down signal, the offsetting test of the bias down signal. Now, if there's a fresh low after 1030, 1030 has gone ahead and triggered now. Grace period was invoked. It would have been 1015 if the grace period had not been invoked, but the grace period was invoked. So now it's 1030. Anything after 1030 that is a fresh low, in order to invalidate the bias, would then require exiting the bias window above the bias up target. Right now, buyers can invalidate the bias signal by just recovering the session high. We now have a fresh low since 1030. We now have a fresh low since 1030. So the bias down signal, it should be 42.82. And I apologize for that. I've already corrected it on the blog, and I'll note that in the blog update that's forthcoming. Upcoming. But 42.82 is the bias down signal. Yeah, signal. Sorry about that. So we now have a fresh low since 10:30. So to invalidate the attraction to the bias down signal now requires exiting the bias window above the bias up target. It's not enough to just recover a fresh session high. So the offsetting test of the bias down signal becomes unfinished business below if we don't actually touch it or come within 3 to 6 ticks of it. And also don't exit the bias window high enough. In this case, now, since there's a fresh low since triggering bias, back above, not the post open high, but the bias up target. Every time sellers are more productive, the burden of proof on buyers gets higher, greater. Bounce limit is 89.25. Bounce limit is 88. Okay, this is going to be in the blog, so I apologize if I'm not going to be totally descriptive repeating it right now. But the first 15 minutes were exited above overnight highs. That created a position of strength, and every attempt to reject it has failed by its timing window. The next 15 minutes were still within the first 15-minute range. That's a position of strength. So clearly, a position of strength for buyers doesn't mean that there can't be a downdraft. The whole point to noting it's a position of strength is because of a downdraft, to know the context is that this is only temporary. It also doesn't suggest, hey, hold on to your long or you're going to be bailed out. This is a trading room. So if you've got a long, you've got to have a stop, and your stop on anything up here should have been triggered a long, long time ago. So if you're still long, and that's the point to the question, you're not actually trading. So the second half hour was exited under the first, or at the first 15 minutes low. In other words, it had probed, but it wasn't actually decisively breaking under. The 1030 print was 42.92. Look at the first 15-minute low was 42.92, or actually lower. So this is all of what sellers are doing is just too late to gain any traction for their efforts. So none of that tells us that this is prevented from extending down or from being productive to the downside, just that it's temporarily productive. The signals, the sell and buy signals, those take priority. The context tells us how productive the buy and sell signals might be, or which ones to bet on, whether a buy signal has a greater potential to hold near term. But there's the offsetting test of the bias down signal. Now we get into another situation. This is no bias, remember? It's a late no bias, but it's no bias. And it's actually a late reverse bias because it held a test of one signal and put into play an offsetting test of the other signal. That other signal is now being tested, but it's still a no bias window. And what do we know about a no bias window? We know that the bias signals should contain or define either end of the range. Now that we're testing 82, we can suspect that this is going to be the lower end of the range. RSIs, still like to see them get oversold. You just don't typically see a negative divergence that breaks, that RSIs break through their mid-range that doesn't extend to oversold. So now that we're down here at or attempting oversold, here we go, just right on the cusp. I can't really call that oversold. 1 minute RSI, not even touching oversold, kind of attacking but not. So I really do want to see oversold before getting any more aggressive or much more aggressive on the buy signal, but we are at support and we're still in a no bias window. So we have a high degree of confidence that a low is going to be in here somewhere. Not for today, for this morning. This morning's bias window. This is likely the lower end. A no bias window should be defined by its bias signals. Bounce limit is 85.25. And just like this position of strength up here, the first 15 minutes and then 30 minutes having held up, waiting too long to break lower, so that tells us who's breaking lower? Weak-handed sellers. How can weak-handed sellers be so productive? Well, because strong-handed buyers are that patient, letting them have more rope to hang themselves. Now, maybe some lucky sellers have scalped stuff along the way, but generally as a crowd, weaker-handed sellers are behind this, and stronger-handed buyers are patiently letting them. We know that from the timing. The timing of the first 15 minutes, second 15 minutes, second half hour versus the first half hour. Calculably, I assume that we're at a low. Now, just like the position of strength didn't prevent a detour down, it's entirely possible that the bias down signal is going to be probed right now during the no bias window that should otherwise have the bias down signal defining the lower end. How can we do both of those? How can we probe the bias down signal in a no bias environment that should be defined by the bias down signal support? Well, that would be called, if it does happen, that would be called no bias trending. And it would require being retraced back to the bias signal. So we could have dismissed a bounce earlier, even though we'd already seen 3-minute RSI cross the mid-range from a negative divergence at the high, likely to extend to oversold. We could have dismissed that outstanding oversold, not yet getting oversold, for a buy signal under the right conditions. And we can still do it, especially now that we're actually at oversold. I'd still like to see literal oversold, and that's going to take a fresh low. But I'll get a little more aggressive on the buy signal. It's not a deal killer at this point. We've satisfied the attraction below, or the consequence, however we want to depict it or describe it. The consequence for sellers having broken lower when they did. So I can get down to 89.25 on a buy signal. Remember, this is a no bias window. This should be the lower end. And we're deep in the bias window. It's not anywhere near lapsing. Sellers are satisfied. They've been rewarded with an offsetting test of the bias down signal. But they haven't yet violated the bounce limit. We're out of the first hour, so now the bounce limit is allowed 3 minutes. Minimum 3 ticks, 3 minutes, and 42.85.25 has been probed by at least 3 ticks, actually by only 3 ticks, and one of those is an errant tick, twice. So I definitely want a 1 or 2 point buffer for noise above 86. So I'm not going to be any closer than 87, 88 on a buy signal at my most aggressive. And if 3-minute RSI had gotten oversold, I would be that aggressive. But I'm right now going to monitor this a little. If I wanted to, this would be justified. Yeah, buy signal above 87 would be justified, but that's at the moment a little too aggressive. Until that bounce limit's violated, the trend is down. The bias signal suggests that the bounce limit will be violated first, or we just hover here. If price just hovers here until the bias window starts lapsing or comes within view of lapsing at 11:30 and then breaks lower, when the bias lapses, it won't be required to hold the bias down signal as support. The trend is your friend until the end. So this is no bias trending. You can see on the 3-minute chart where the bias signals are identified, you can see we're actually probing under the bias down signal. And we know already this is a no bias window. If you go back to the blog update, I mean, we've been talking about it, you can do the calculations on your own or refresh this page, and where it said pending, it now says late, no bias. We tested the bias up, so we put in a plain offsetting test of the bias down. In other words, a reverse bias, that's fulfilled. But this is no bias, so the bias down signal should define the lower end, and clearly it's not very well. I mean, we are still overlapping it, actually. Not actually. If you look at the 3-minute chart now, it looks like a pretty big sentiment extreme. Kind of a middle finger. Anyway, I can lower the bounce limit. But if it doesn't matter right now so much, but at 11:30, if we're still probing under 82, or back to probing under 82, not overlapping it, 82 will require being recovered. After 11:30, when the bias window, the no bias window starts lapsing, 82 can give way to its heart's content. Pretty big bounce limit. Bounce limit is 83.50. And now I am lowering the buy signal to 87. So this is pretty neat because the bounce limit is allowed 3 minutes to be probed, and during those 3 minutes, it is probably, or at least the premise is that it's just weak-handed counter-trend sponsorship. It has to be violated. That 3-minute high has to be probed. It has to be established first, and then it can be probed to indicate that stronger-handed buyers are coming in, that reinforcements are coming. So this is a relatively shallow probe of the 3 minutes, or for those 3 minutes above the bounce limit. Sitting at the bias down signal in a window that should be defined by the bias down signal. So obviously we're not going to be looking at adding to a short in here at the bias down signal, at the target. So now that the 3-minute high is being probed, the buy signal, that would have been disqualified, by the way. If the buy signal were being probed during the first 3 minutes of testing the bounce limit, it wouldn't have been qualified to trigger. Can't be doing both. Can't be testing a sell signal's correction limit, bounce limit, and triggering a buy signal with the same bar. But that's not the case here. These are different bars. Now the only thing that buyers need is at least 3 ticks of probing the buy signal. This doesn't qualify. We haven't started the countdown on probing the buy signal. Once it's probed by 3 ticks, we can identify the 3-minute high and where then reinforcements would be arriving. Still just errant ticks, so not quite the spirit of testing this resistance as a buy signal. I mean, this is more similar to screeching to a halt on the highway or on a city street and going up on the curb momentarily, but still coming to a stop. That's really all that buyers have done here. So I mean, we can start the countdown. That is a minimum 3 ticks. If I were a computer algorithm, I would be starting the countdown. Maybe in retrospect, stopping the countdown because it turns out to have been errant ticks. But a buy stop that was sitting above 87 would be triggered, filled. But that's not the spirit of a buy signal actually chipping away at the signal. This is more the spirit of a buy signal, really getting some volume through it, testing it. This is behaving much more like resistance. Another probe above it, I'd give a benefit of the doubt to if it were to probe it by at least 3 ticks to start the countdown. So we're not actually probing under 82 as required during the no bias window. The bias down signal held. It recovered that probe lower. That was much more like speeding down the highway, slamming on the brakes, going up on the shoulder, going over on the shoulder, and then coming back into the lane by the time you come to a stop. That was much more like that. Anyway, a no bias trending not really happening right now since we're above 82, at least at the moment. Now, we're within several minutes of the bias window lapsing. We're within several minutes of the bias window actually starting to lapse. It lapses or starts lapsing at 11:30 at the bottom of the hour. You can see that on the timeline down here. Just coming to within 10 or 15 minutes of that. If we start coming to within 10 or 15 minutes of the bias window lapsing and we're breaking under 82, that's not going to require being retraced. That's not going to qualify as no bias trending. Coming that close, hovering or returning back above 82, and then waiting until we're within 10 or 15 minutes of the bias window lapsing to break under 82, that's not a deal killer. That's not going to require being retraced. Sellers would be perfectly entitled to extend and extend and extend if they wanted to or could. So, and described why I don't really consider this to be a test of the buy signal so much as a test of resistance up here. So there's no countdown underway either way. Meanwhile, since we are within a minute or two of the bias window lapsing, back under 80.50, if this bounce, even though it's violated its bounce limit, if the bounce fails, then not only fails but is so rejected that we break under 80.50, I'll give sellers every benefit of the doubt that that bounce has failed, that downside momentum has resumed. So I'm not sure. Is this a question or is this just is this for me or are you just having a conversation on probes of 4,300 area? So, I mean, I read this as a conclusion. What is the question, really? NQ and the Dow are down. Is that a sell signal? We're within 10 or 15 minutes of the bias window lapsing. So that 42.82 bias down signal is interesting, but it's otherwise irrelevant. We're within view of the bias window lapsing or starting to lapse at 11:30, so there's no requirement to hold 42.82 any longer. That window is starting to dissolve. And if sellers wanted to start taking control or exerting as much or more control as earlier, they're free to do so. Now, I'm not lowering the buy signal. I don't even think the buy signal has been tested. It's just been pierced by some errant ticks. So if it hasn't been tested, it hasn't been rejected. I might add a lower buy signal if we get closer to 11:30 or past 11:30 actually, and we're still sitting here at around 82. Is the likelihood of extending lower now might be increasing? Question is the likelihood of extending lower. Yeah, that's not how I read the market. Just because price is down, that it's going down. Price is down, and so it went down. It's not a buy signal, but I don't see it as offering any further insights. Certainly looks like NQs are a big contributor to why ES had difficulty getting out to fresh highs. There's NQs on the left. Here's the Dow outperforming. We saw a day like this recently last Friday but no second consecutive session, that would be bearish for 2 consecutive sessions of NQs significantly underperforming or underperforming at all S&Ps while the Dow outperformed S&Ps. 2 consecutive sessions of that. I'm sorry, I didn't even see that question. So I see it now. Can the actual high be neutralized within 3 to 6 ticks, or must it be touched? Um, what I was describing was a position of strength. I think that's what you're referring to, that I'm calling these buyers during the first 15 minutes a position of strength that suggests that this is a temporary detour. Is that correct? That's what you're referring to? So, returning to the pivotal high after having probed under the interim low, returning to the pivotal high, which we've done, now all but ensures probing the actual high. This is where that information is useful. When instead of already probing the actual high, there's another detour already. That's just another separate input that this is a temporary detour. Probing. So until we actually probe 4306. The reward for having returned from under the interim low back to the pivotal high has yet to be received. Awarded. So we're now within a couple minutes of the bias window actually lapsing. Look at all this opportunity. We're sitting right here at 82, right at the bias down signal, chipping away at its support, already within 10 or 15 minutes of it lapsing, already within view of it lapsing where it could break lower and not require recovering to 82, not even just a tag up. And still overlapping 82, bouncing off of 82. There's an inflection, a calculable inflection based on the tests of 82 previously. And that is only being attacked. Just not giving sellers a big benefit of the doubt here. All this behavior and actually the timing of the behavior specifically suggests that price is down because buyers have willed it. They want it down. They want sellers to trap themselves. And I'm willing to play along under 80.50 if that happens. All right, any questions about that, any of that, please let me know. Be right back.
We don't need more digital currency. We already have digital currency. It's called the US dollar, it's called the euro, it's called the yen. They're all digital right now. We don't need more digital currency. We already have digital currency. It's called the US dollar, it's called the euro.
So there's a 3-minute high to testing the buy signal, and there's a 3-minute low to testing the buy signal till the 3-minute high is exceeded, and by reinforcements. There's a room for a counter trend detouring 3 minutes. This is pretty much it, or getting there. So we're in the process of testing the buy signal, and there's really just one bite at this apple. Timing window doesn't really allow another dip and then a reversal. So any kind of fresh high here, and really just attack, well, 89.50, 42.90. Anything like that, I would give every benefit of the doubt to having resolved the downside and intending to rally through the noon hour. But this 3-minute low itself is being exceeded, getting pretty close to this buy signal. There's a little uptrending support here. Literally the cheapest that this buy signal can trade. Here's the fluctuation around the buy signal. This is the cheapest that the buy signal can trade, that the test of the buy signal can get to, and still be in the process of testing the buy signal. So pretty attractive long with a stop and reverse, at least a stop, but a stop and reverse to short under the sell signal, 82.50. I think if the sell were lowered to 81.50, it would still be attractively priced right here to be long. Question yesterday, you talked about a trending channel pattern that if price breaks from it, then it will likely revisit the corresponding high-low. Does Atlassian daily chart from May 9 qualify for that pattern? So first of all, let's look at that pattern. I think I still have it identified, annotated. There it is. So this was yesterday. This was the channel. Just a nice, controlled, organized trend. When something like this suddenly snaps like this, it's just never, or not always, rarely actually, a good idea to try to chase it. Usually, it's going to recover back to the origin of the break, often through it. That's usually the work of counter-trend sponsorship, to suddenly upset the apple cart. Nice 61.8 retracement of it. Let's take a look at this. Right now, under uptrending support, under this inflection at 82.50, there's just errant ticks right now, but it's at least 3 ticks. If we get any kind of volume through here, which we're starting to, but not the full 3 ticks, there we go. Now sellers are getting one bite at this apple. This is really what they need to take out. Uptrending support. It's not the trend line that defines the trend reversal. The trend line can be broken. It's just a messier trend. Higher highs and higher lows is what defines a trend, not a trend line break. So far, this prior low of the trend line, the last touch of the trend line, while that is being overlapped, the actual low of it, 80.75, has yet to break lower. I'll still keep the door open to buyers. So back to that pattern on Atlassian. So let me ask first, have you tried doing this? Have you tried replicating that narrow channel on your own charting package? And if you did it look like this? So how about doing this? How about taking a screenshot? Did you get a screenshot of the pattern that we looked at yesterday and I just showed again? I mean, did you notice a difference, kind of a glaring difference? There's the channel, there's the 61.8, 155 basically. We're literally 21 points above that. So, I mean, pretty big difference between the two patterns. Is this a narrow uptrending channel? Yes, but I don't know what it's going to look like if or when it ever breaks to a 61.8% degree. Not even a 38.2 at this point. So, I'm trying to think of something else to comment on that. I mean, are you just trying to prepare for the potential that maybe it'll break lower suddenly by 61.8%? Were you asking whether that break is the break that should be retraced? So, I mean, definitely needs some Fibonacci relationship to the high and low of the channel that's breaking. So until it at least touches a 38.2 retracement, is not really a shock to the system. It's just noise. That's where you need to see a sudden readjustment, repricing. All right, so there's a sell signal. There's the last relative low if we go with the extreme, and we're definitely threatening. But look at that quick blip down. I'll still give sellers every benefit of the doubt now that they've established a 3-minute low under the inflection point. What's that? 42, 81, 25, anything under 81 or lower? I'll give every benefit of the doubt. I would expect 81 and lower to suddenly collapse. But meanwhile, that's really shaping up like a false break. We can only know this in retrospect. And if that false break comes out the other end, then we should, instead of seeing a collapse, see the opposite and a pretty strong noon hour. they got that benefit of the doubt. Would I view this as a bear flag? Yeah, that's fine. Bounce limit is 81. And I'll be getting more aggressive on the buy signal. But keep in mind, there's no requirement for 82 to define the lower end of the range any longer. I'll be monitoring a bounce limit for the bounce limit to be probed for the 3-minute high of the bounce limit to be exceeded by 1 or 2 points, room for noise. Anything higher than that would be a buy signal. So if you're in the YouTube room, don't forget that this room, I'm going to close. I usually close this at noon. I'm going to leave it open for a little bit longer. See if we can't get something going. Don't forget that if this up here, this is not unfinished business above, but this was a position of strength for reasons I described earlier, and it's likely to be retested, recovered, and exceeded, by the way. And often that's going to be the same day. When there's a detour the day of establishing a position of strength in here at one extreme, and that's tested as it is being tested here, usually that's going to resolve the same day. So there is a strong potential of recovering, if not today, then tomorrow, back to session highs. I'm going to leave the room open, though. I'll leave this room open for a little bit longer. We don't have to close it right now. And don't forget that it is reopening tomorrow. I'm going to do this. This is a 2-day event. Tomorrow morning, all morning, this live stream will be simulcast. I apologize for the delay. I know there's a delay on YouTube, some latency. It's not experienced in the live vidiROOM, the actual vidiROOM that's being telecast, simulcast here. But just so you know, later today, the room will be closed. Before we get out of the noon hour, I will be closing the YouTube room until tomorrow morning. 7 o'clock for the planner session tomorrow, 9:15 for the pre-open update, 9:30 through noon, all morning long. And then closed until the next time. And if you want to be a full paying or want access to the vidiROOM for the full Sunday night through Friday, close. You can be a paid subscriber. I did put a link. If you scroll back up through the chat, there's a link. Click on it. You can see the terms. It doesn't automatically charge you until you decide to. But you can click on that link for the special savings offer. Get the vidiROOM. It's usually a $200 upcharge for the vidiROOM per term, but you can get your first 3 terms. That's $600 savings. And you can get access to the blog. I mean, you're really just seeing one hand clapping right now, even hearing one hand clapping. Same thing. Because you're not getting access to the blog updates when you just drop in like this. There's about to be a fully searchable database of all my setups and hundreds, if not thousands, I don't know what the total is, it's being curated for me, of instances of the setups having developed over the course of several years. So you can go back and look at those instances and compare them. It's going to be pretty cool. I can just say this is the setup and you can go search it and see how it plays out. And all these instances of it having played out that way and get a degree of confidence. So if you are leaving, thank you for stopping in, and you're welcome back tomorrow for the second of the 2-day, 2-morning free look at the vidiROOM. So right now, here's a 3-minute high to testing a bounce limit, which is an option. Do you sell that? Because that's as close as we can get to where we know it's wrong to be short. Anything higher violates the bounce limit. Otherwise, the trend remains intact. The downtrend remains intact. Sell it with a stop and reverse to long, 1 or 2 points higher, above 85. So there's a question back here. I know you have a Wednesday reversal pattern that we've not seen in a while. When the morning and afternoon look very different, and the flip happens during the noon hour. Today is certainly not that, but might be in the spirit of it. So it's certainly not that, but it might be in the spirit of it. And also, I don't know about a noon hour flip. That's nothing that is in my work. That a flip has to happen in the noon hour. I think you're talking about a reversal Wednesday, but there's no timing to that. And you're right, it's certainly not that because the initial trending has to be pretty convincing. This was very brief. So the bounce limit was probed no higher than its first 3 minutes. The downtrend remains intact. Maybe this is the end of it, but the point is the bounce limit was productive. It produced a fresh low. The test produced a fresh low, or at least returned to the origin of the bounce. Not deeply enough to be able to calculate a new bounce limit, so we just repurpose the original bounce limit. So it's not much, but RSIs are avoiding oversold. We did get 1 minute RSI to oversold finally. Finally have an opportunity for a low in here. There's a not necessarily positive divergence, but at least it's a higher low. It didn't touch oversold, but it's still pretty much on the cusp of being oversold. But it's the noon hour anyway, and if it were oversold during the noon hour, it wouldn't require a retest. That could have developed too. 3 minute RSI very much making a higher low and diverging positively. Sort of. Right on the cusp of being oversold. We discussed this in detail earlier. So, as I said on the way down, usually we're going to see one or both RSIs get oversold before there's a bottom. And we got to support, and we had a timing window. We had a couple reasons to suspect that, but now we don't have any other reasons. Now we have literally oversold RSI. At least one RSI, 1 minute or 3 minute, is oversold. Now with a fresh low, that is actually a positive divergence, or at least a higher low. Here's a bounce limit being tested for 3 minutes. 3 minute high being established. Right up here to 81.25. I'll come down a little bit more aggressively to 83. And if this pattern does, or the trend I should say, does stop, it stops abruptly. It makes it well known. It doesn't just slide sideways in here. don't know if this is last ditch opportunity or not. It is not great timing for still sitting at the lows, even if we were just off the lows. To be exiting the noon hour at lows, attacking lows, barely bouncing off of lows. If you notice a pattern there, it's the word lows. That was not unintentional. So this is really last ditch effort for avoiding what would be then bigger down leg. It's interesting that we're off, though, the bias down signal. The bias down signal hasn't been touched. And that's not an accident. So there's some potential here for at least ranging sideways through the bias window. So for that possibility that this is just noise, it's just back down to the prior low. For that possibility, clearly we just had 3 ticks above the buy signal, never got any reinforcement. It was really just tested as resistance. I'll get aggressive. A little bit of an opportunity here above 79.25 for buyers. But look at the time. There's plenty of time here. 20 minutes for sellers to blip down just a little bit and start triggering the bias down signal. So it's not at all too late. And the inflection here does correlate. It is the bias down signal. Interestingly, price action through the noon hour has pretty much correlated to the bias. And it's a pretty productive signal as well. All right, I do need to close the YouTube room, so YouTube simulcast. Thank you again. Thank you for being here today. $7 a.m. Before 7 a.m. The room opens tomorrow before 7 a.m. If you want to come back for day 2 of the simulcast, day 2 of 2, morning 2 actually. Have a great rest of your day. Take care.